For more on the latest inflation numbers and to get his views on the Fed, we want to bring in David Wessel. He is the director of Brookings Institution's Hutchins Center on Fiscal and Monetary Policy. And David, what do you think? We keep thinking and keep hoping that we have seen the peaks of inflation, but how long do you think it lasts? How high do you think it'll be before we get back to the Fed's target of 2%?
I think the inflation is moving in the right direction. One of the good things about today's number is that it's not surprising, and we've had so many surprises on the inflation front. This is consistent with the forecast that the Fed put out in its last statement of economic projections for where they think PCE inflation will be. But as you point out, we're still a long way from 2%, and I don't think the Fed will be satisfied that the inflation rate is coming down fast enough. And Jay Powell in particular keeps harping on wage costs. He thinks wages are rising too fast to be consistent with his 2% inflation target. So I expect they'll keep raising rates. I think it'll be a couple of years before we get inflation down to 2%. And who knows, the Fed may change the target before we get there.
Yeah, it's the wage inflation, I think, that is the biggest issue. Is this a different labor market? Is this a situation where, normally the labor market will tighten up a little bit, or normally the labor market weakens and then you see a break in inflation? Do you see that happening this time around?
Well, I think the labor market has been persistently strong. Unemployment remains low. And if you look at the Fed's forecast, they essentially say the unemployment rate is too low and they would like to raise it. So I think they'll keep tightening until they can move up the unemployment rate. So what's going on here? Well, one thing is that the economy is still pretty strong. Steve mentioned earlier, or maybe Santelli, a comparison to Europe. The Fed has an economy that it thinks is growing too strong, and that's why we have inflation. It's trying to cool it off. The Europeans have an economy that's still weak, and they're trying to cool off inflation. So it's a much harder thing. I think big question, what happens to labor supply? Will people who've been on the sidelines of the economy come back into the labor market? Will that relieve some of the pressure on wages and get rid of all these help wanted signs you see when you walk down the street? Or will this persist until the Fed feels like it has to really slam on the brakes? One really interesting and encouraging thing is the Census Bureau reported this week that net migration to the U.S. was 1 million people. That's more than any year since 2010. And we know that in some industries, the decline of immigration, partly because of COVID, partly because of President Trump's policies and attitudes, has made it hard to hire, and that's forced up wages.
We had David Tepper on, the investor, yesterday, David, and he was pretty interesting in how he looks at the big macro. He said he's going to be short equities. He's leaning short equities right now because when the Fed speaks and when other heads of central banks speak and say that they are going to raise rates continually and hold those rates higher for longer, he believes them. It's counter to maybe the prevailing view in the markets right now. A lot of investors seem to think that the Fed's going to have to change its mind at some point and backtrack, if not just flat out stop. But you sound like you believe the Fed, too.
Well, first of all, if you're looking for advice on investing in the stock market, you should listen to David Tepper, not to me.
But just in terms of believing them, believing what
I believe
they say.
the Fed.
Yeah.
I believe the Fed is resolute. I believe that Jay Powell does not want to leave office as the Fed chair who let inflation get out of control. And I think when they come to the really close calls, and that'll happen sometime in 2023, I suspect they will err on the side of doing too much rather than too little. So if the stock market is driven by what the Fed does, you should believe what the Fed says. I think they really mean it.